Imagine this. You're standing in line at the grocery store, staring at the price tags, feeling the pinch as costs steadily rise. That gallon of milk? It's now a few bucks more than it was last year. Gas prices are up, utilities are higher, and you wonder if there's any way to shield yourself from this constant climb in living expenses. Now picture something different. A way to stay ahead of this upward spiral, a strategy that not only preserves your wealth, but actually grows it. That strategy, real estate. In today's volatile economic climate, inflation is a persistent reality. But real estate, it stands firm as one of the most powerful tools to hedge against rising costs. In this video, we'll dive into the top 10 reasons why real estate is the ultimate inflation hedge and how it can help you safeguard your financial future. 10. Real estate appreciates over time. Let's start with one of the most compelling reasons. Historically, real estate has appreciated in value. Unlike paper currency, which can lose its purchasing power during inflationary periods, real estate tends to increase in value. Think about it. Land is a finite resource. As demand rises, so do property prices. Take the example of a property purchased 20 years ago. That same piece of real estate is likely worth far more today, despite any fluctuations in the economy. Inflation might make your dollar worth less, but it often makes your property worth more. Over time, this appreciation can far outpace inflation, effectively preserving and growing your wealth. 9. Rental income increases with inflation. Now, if you're a real estate investor, this next one will make a lot of sense. Inflation pushes up the prices of goods and services, and rent is no exception. If you own rental properties, inflation can actually work in your favor. As inflation rises, so do rent prices, allowing you to increase your rental income year after year. Consider the case of an apartment building owner. As inflation hikes up living expenses, more people may choose renting over buying homes, pushing demand for rental properties higher. This rise in demand means property owners can charge more for rent, which not only covers the rising costs of maintenance, but also boosts their cash flow. 8. Leverage becomes more powerful during inflation. Real estate allows you to use leverage, essentially borrowing money to buy property. Here's why this is important. During periods of inflation, the value of the money you've borrowed decreases over time. Let's break it down. Say you took out a mortgage on a property a few years ago. You locked in your interest rate, but inflation has since driven prices up across the board. However, your mortgage payment remains the same. This means you're essentially paying back your loan with cheaper dollars as inflation erodes the value of that debt. In other words, inflation makes your leverage more powerful and your real estate investment more valuable. 7. Real estate offers tangible value. Unlike stocks, bonds, or cryptocurrency, real estate is a physical, tangible asset. You can touch it, live in it, and rent it out. While inflation can wreak havoc on paper investments, real estate holds its intrinsic value because it serves a fundamental human need: shelter. Think about it. In an inflationary environment, people will still need homes, and the tangible nature of real estate gives it staying power. No matter how much inflation rises, you still have a property that can generate income, appreciate in value, and serve as a hedge against uncertainty. 6. Real estate provides shelter from market volatility. When inflation hits, the stock market tends to become volatile, with investors scrambling to protect their portfolios. But real estate often moves in the opposite direction. It doesn't experience the same level of short-term fluctuations that stocks do, making it a safer harbor for your money. Think about the Great Recession of 2008 or the pandemic in 2020. While stock prices plummeted during these crises, real estate didn't fall off a cliff in the same way. In fact, real estate values recovered relatively quickly. It's the type of asset that weathers storms well, especially when inflation is running rampant. 5. Long-term fixed-rate mortgages lock in costs. One of the smartest financial moves during inflationary times is locking in a long-term fixed-rate mortgage. Why? Because while inflation drives up the cost of nearly everything else, your mortgage payments remain the same. Imagine you buy a home today with a fixed-rate mortgage. Over the next 10, 20, or even 30 years, inflation may cause wages and prices to rise, but your monthly payments stay constant. As inflation increases, those mortgage payments become easier to manage relative to other rising expenses, giving you a significant financial advantage. 4. Forced savings through equity building. Every month that you make a mortgage payment, you're building equity in your property. In a way, owning real estate acts as a forced savings plan. Each payment you make not only pays off your debt, but also increases your ownership stake in a valuable asset. As inflation erodes the value of cash, that equity you're building in your home or investment property grows even more valuable. By the time your mortgage is paid off, you'll have a fully owned asset that is likely appreciated in value, providing a solid hedge against inflation. 3. Tax benefits help offset inflationary pressures. Real estate investors benefit from a variety of tax breaks that can help offset inflation's effects. From depreciation deductions to mortgage interest write-offs, real estate can significantly lower your taxable income. Let's take depreciation, for example. Even as your property appreciates in value, the IRS allows you to deduct a portion of the building's value each year. This paper loss can reduce your overall tax bill, which in turn helps to shield your investment from inflation. By leveraging these tax benefits, real estate investors can preserve more of their wealth in an inflationary environment. 2. Real estate as a hedge against rising construction costs. When inflation strikes, the cost of raw materials, labor, and construction skyrockets. This can deter new developments and shrink the supply of available homes, pushing prices even higher. If you already own real estate, this supply-demand dynamic can significantly boost your property's value. Let's say you own a house, and inflation causes construction costs to soar. The price tag on building new homes becomes prohibitively expensive, which means fewer homes on the market. As a result, your property, which is already built and established, becomes more valuable due to increased demand. 1. Diversification from traditional investments. Finally, real estate provides a crucial layer of diversification from traditional assets like stocks and bonds, which are more susceptible to inflation's adverse effects. By holding a mix of real estate alongside your other investments, you're not putting all your eggs in one basket. This balance can help stabilize your overall portfolio during inflationary times. While the stock market might falter, real estate, because of its ability to appreciate and generate rental income, can buoy your financial standing and serve as a hedge against the declining value of money. As inflation continues to rise, the question isn't whether it will impact your financial future, it's how you'll prepare for it. Real estate stands as a powerful hedge against inflation, offering appreciation, income growth, and tangible value that other investments simply can't match. Whether you're an experienced investor or just starting out, now is the time to consider how real estate can protect and grow your wealth in the face of rising costs. By taking advantage of these 10 reasons, you'll be better positioned to weather any economic storm and safeguard your financial future. If you found this video helpful, make sure to hit that like button and share your thoughts in the comments below. Don't forget to subscribe to the channel and hit the bell icon so you never miss out on more tips to build and secure your financial future through smart investments. Thanks for watching, and we'll see you in the next video.